Hello, budget bosses. Welcome back to the channel. Are you tired of seeing your hard-earned money just sit in a bank, barely earning any interest? Do you dream of making your money work for you, but feel overwhelmed by all the complicated financial jargon out there? If you've ever thought about investing but felt it was too complicated, too risky, or only for the rich, then this video is for you. Today, we're going to demystify the Philippine Stock Exchange, or PSE. I'll break it down into simple, easy-to-understand steps so that by the end of this video, you'll feel confident enough to start your own investment journey. We'll cover what stocks are, how to actually buy them, what to invest in, and how to manage your expectations. Ready to take control of your financial future? Let's get started. So, what exactly is the stock market? Let's strip away all the scary Wall Street-style imagery. At its core, the stock market is simply a marketplace, just like a farmer's market or a shopping mall. But instead of buying fruits, vegetables, or clothes, you're buying and selling tiny pieces of publicly listed companies. These tiny pieces are called shares, or stocks. Imagine your favorite Filipino company, say Jollibee. When you buy a share of Jollibee Foods Corporation, you're not just a customer anymore. You become a part owner of the company. A very, very small part owner, but an owner nonetheless. This means that as Jollibee grows, opens more stores, and makes more profit, the value of your share can also increase. If the company decides to share its profits with its owners, you might receive a portion of that, which is called a dividend. So when you hear people talking about playing the stock market, what they're really doing is buying ownership stakes in businesses they believe will succeed and become more valuable over time. It's about participating in the growth of the country's biggest and best companies. Now for the exciting part. How do you actually start buying these shares? You can't just walk into a Jollibee branch and ask to buy a stock. You need a middleman, and that middleman is called a stockbroker. A stockbroker is a company licensed by the PSE to facilitate the buying and selling of stocks for investors like you and me. Think of it like a real estate agent for stocks. You tell them what you want to buy or sell, and they execute the transaction for you. In the Philippines, we have several reputable online stockbrokers that make the process incredibly easy. Some of the most popular ones for beginners include COL Financial, BDO Nomura, if you're a BDO client, and First Metro Sec. Getting started is surprisingly simple. You just need to open an account with one of these brokers, which you can often do completely online. You'll need to submit some identification documents and fill out a few forms. And here's the best part. You don't need a huge amount of money to begin. While some people imagine you need millions, many of these platforms allow you to start with as little as 1,000 pesos. That's right, for less than the price of a fancy dinner, you can become a part owner of a major Philippine corporation. Once your account is set up and funded, you can log into their platform and start investing. Okay, you've opened your brokerage account, you've funded it with your first 1,000 or 5,000 pesos, and now you're staring at a list of hundreds of companies. What do you buy? This is where many beginners get into trouble. You might hear news about a hot stock that's shooting up in price, or a friend might give you a tip on a company that's guaranteed to make you rich quick. My advice? Ignore all of that noise. Chasing hot stocks is a form of gambling, not investing. As a beginner, your strategy should be built on stability and long-term growth, not short-term speculation. The safest and most recommended approach is to invest in what are known as blue-chip companies. These are the large, well-established, and financially sound companies that have been around for a long time and have a history of stable growth. Think about the biggest names in Philippine business. Companies in banking, telecommunications, property, and consumer goods. They are the foundation of our economy. An even simpler option is to invest in an index fund. What's that? An index fund is like a pre-packaged basket of stocks that automatically includes all the top companies in the market. The most famous one in the Philippines is the PSEI Index Fund, which tracks the 30 largest and most active companies on the Philippine Stock Exchange. By buying just one share of an index fund, you instantly become invested in all 30 of those companies. This automatically diversifies your investment and reduces your risk. Remember, the key here is to think long-term. Don't plan to take your money out next month or next year. Aim to stay invested for at least 5 years or even longer to let your money truly grow. Now, let's talk about the elephant in the room: risk. You've probably heard horror stories of people losing all their money in the stock market. And it's true, investing is not without risk. The value of your stocks will not go up in a straight line. In fact, it's completely normal for prices to go up and down every single day. This is called volatility. There will be days, weeks, or even months when your portfolio's value is down. This can be scary, and the natural instinct is to panic and sell. But successful long-term investors know that these fluctuations are just part of the game. The key is not to react emotionally to short-term movements. Instead, let's compare it to putting your money in a regular savings account. In a bank, your money is safe. But with today's low interest rates and rising inflation, its purchasing power is actually shrinking over time. 100 pesos today buys less than it did a year ago. In the stock market, while there is short-term risk, history has shown that over the long run, the market trends upwards. By investing in strong, stable companies or a diversified index fund, you are positioning yourself to outpace inflation and achieve real growth. The risk isn't about losing everything overnight, especially if you're diversified. The real risk is letting fear prevent you from building wealth and achieving your financial goals. By staying invested through the ups and downs, you give your money the best chance to grow significantly over time. So let's recap what we've learned. The stock market is a place to buy ownership in great companies. You can easily get started through an online broker with a small amount of capital. As a beginner, you should focus on investing in stable blue-chip companies or a PSEI index fund for instant diversification. And most importantly, you must be prepared for the ups and downs and commit to investing for the long term. Investing isn't a get-rich-quick scheme. It's a proven method for building wealth over time. The journey of 1,000 miles begins with a single step, and your investment journey can begin today with that first 1,000 pesos. Be patient with your investments, be consistent with your contributions, and most of all, be proud that you are taking a massive step towards securing your financial future. I hope this guide has made investing feel a lot less intimidating and a lot more achievable. If you found this video helpful, please give it a big thumbs up, and don't forget to click that subscribe button and ring the notification bell. Here at Budget Boss, we're all about empowering you with simple, actionable financial advice. Thank you for watching, and I'll see you in the next video.